So I really think right now, real estate is a great place to put a good component of your investments, because I think like it will bounce back as long as you are partnered with the people that know what they're doing.
You're listening to the Real Returns podcast, where we learn how real investments can make a real impact. Join your hosts, Andrew and Dan, as they share stories and interview business leaders on how real estate and other forms of investment can create meaningful change for individuals and communities around the world.
Hey everyone, welcome back to another episode of the Real Returns podcast. I'm your host, Andrew Reichert. Really excited about today's episode. I've got a YPOer friend of mine as a guest, Sasha Bernier, and he's a seasoned investor, a strategic leader. He's managing partner at Hestia Holdings and also a partner at Cheltenham Enterprises. He and I got to know each other through the YPO network, and he's done some really fascinating things in his career. So thanks for being on the show today, Sasha. Can you just tell me a little bit about kind of what you're up to today and how did you get to where you are?
Andrew, it's great to be here. Excited to be with you. One thing that I love about YPO is I get to meet amazing people, smart people like you. So it's been a great journey being part of YPO. Right now, I'm focused on real estate. My strategy is to be very tactical. Based on my career, I've invested in private equity and private credit. In the bulk of my career, I've done a lot in real estate. And having seen so many different cycles, 2021 was the peak of the most recent cycle. And we've decided to really focus on real estate, specifically right now in industrial outdoor storage. And I'll love to talk to you about like why we're focusing on iOS.
Yeah, I'd love to hear more about that. So I know you've been through a few cycles, and the great financial crisis, definitely kind of gave everybody a bit of an eye-opening experience. So what have you learned kind of as having been in the industry for a while in terms of asset class focus?
Yeah, what's interesting is I graduated law school after coming out of the crisis with the internet bubble and coming out of 9/11, where there was real market fear at that time. And most of that market fear was because things were just overvalued, similar to how we're feeling about the AI bubble. And when I went to law school, I was really trying to explore what did I want to do next. And right after law school, I would go and work in the M&A department at Evercore Partners, and then I would go work for a credit hedge fund at the time. And it was really at the heart of the Great Recession, where you saw everyone being extremely afraid, and you saw all the crashes all across different asset classes. The most interesting thing, though, is a one asset class that if you were patient, that did really well was real estate. Even though that was really what caused and triggered the Great Recession, because people were just overpaying for every single asset in that asset class, those who were smart and patient and that went into real estate were able to eventually come out of it and preserve a majority of their capital. An interesting thing, Andrew, is having come out of that credit hedge fund, I went to work for my mentor, who I reported to at the hedge fund, who spun out to invest his own capital, who made money in real estate and saw an opportunity and asked me to come and run his capital to take advantage of the Great Recession. And even though right now I run a tactical process when we think about investing, I always make sure that I have a core real estate positions, because real estate is just a great way, whether you're debt, preferred equity, or equity, there's always a place in the capital structure in real estate that you can do well in if you play it really right, and a sector that allows you to be diversified. And I think that every time when I'm constructing a portfolio, I really think about where do I want to be in the capital structure, and if I can make sure I over allocate something into real estate to preserve capital, because at the end of the day, especially when you're running other people's money, preservation of capital is very important.
Yeah, well, I'd love to dig in there a little bit. So you talked a little bit about fear and how there was fear that created the opportunity kind of after the great financial crisis. I'm curious how you think about that in today's market. You mentioned kind of, 2021 and being at the peak there. I think there's been some fear and, people kind of waiting on the sidelines for the past few years since then. What are you seeing in the market, and what opportunities do you see right now? I know you mentioned you like outdoor storage. what really are the factors that you're looking at that make you like a particular asset class?
Here's what's really interesting, okay? Coming out of the great financial crisis and really call it a period of, I'd say, like, I don't know, 2011 to about 2021, rates were very low, right? And as a result of that, people were able to just buy anything and make money because it was really just a interest rate play, right? Interest rates were low enough where you could go and buy any asset, specifically multifamily, and depend on rates continue to be low and selling the next assets to someone else who supposedly could have some type of value add strategy, right? And what happened at that time was it was really hard to decipher who were the people who were actually adding value and understood the actual business component of buying an asset class, making the necessary changes, adding value, and bringing appreciation to an asset class, right? And what happened in 2021 when we were at the peak and rates started accelerating in 2022, all those people who weren't really investors basically got their shirts taken off, and we learned who were the real investors from those investors who didn't really understand how to invest. And it washed out the system. And because the system got washed, Andrew, there was a lot of fear because a lot of people have lost money, right? And to be honest with you, banks made the mistake of just giving out leverage, and no one was disciplined. And the great thing now about this environment is this is an environment where you find out who knows what they're doing, and now you really understand who's disciplined, understands the strategy, and can really extract value. So I really think right now, real estate is a great place to put a good component of your investments, because I think like it will bounce back as long as you are partnered with the people that know what they're doing. So right now, two asset classes that I do like right now. The first one that I'm excited about is industrial outdoor storage. The reason is it's not yet institutional. There are few players that really understand the game, and basically what iOS is sort of like a covered land play. There's access land where companies that need to park equipment, trucks, anything that they can put outside will value land. And usually what we're doing is we have a 10,000 square foot building that is on 2 acres where there's value to that property, so that banks are willing to lend against it. And you've got excess capacity outside of land where you're in a place, an area that's growing, right? So that maybe down the line, the future, there's significant value to it. But most importantly, you don't have to worry about inflation because of the expense component, right? Because you've got like a huge land play. So I'll give you an example of a deal that we just did out in Florida. We bought a property where the underlying business was a bathroom equipment company, exactly 10,000 square foot on 2 acres. And the underlying business was generating $3 million of EBITDA. We bought it at a 8 cap rate. United Rentals liked the underlying business. And once we complete that transaction, the tenant is now going to be a credit tenant. So we're going to go from an 8 cap to 5 3/4 cap rate, which is a home run. That doesn't happen all the time. But what we loved about that property is you have a credit tenant and you don't have to rely a lot on the expense side. Now, I do also like multifamily, and I think it's a great place for managers like you who have seen cycles, but understand more importantly how to control the expense side. Because I think, Andrew, what you're going to see in 2026, you're going to see a lot of distress opportunities, right? In fact, you're already seeing it. Banks are now beginning to realize that you're not going to get the rates that you were seeing before. So I do think that now, if you're an experienced manager going into 26, they're going to start offloading assets that they realize are impaired. And this is where I think now in multifamily, because if you look at all cycles of let Sam's out, it comes back. And this is the opportunity to get assets on the cheap. And if you now have discipline and you're buying at the right price and really understand controlling expenses, because really no one knows where inflation is going. But if you underwrite that really well, you can outperform like we did in 2008, 9, 10, 11, 12, right? Because now it's no longer your barber, right, offering to syndicate a deal to one of their clients, which you were seeing literally back in 2019, 2022, when it was just like crazy. Now it's about that disciplined investor. So I do like those two asset classes, because I do think that one is a play where you if you don't know where inflation is going, you don't have to worry about the expense side. The other side, if you're a super experienced manager and you're disciplined, you buy it at the right price and you focus on that, and you're conservative on your revenue growth, growth will always happen in the United States. It happens, and you're going to start seeing more REOs, more distressed places. So I think like in those two areas, you can not only preserve capital, but you can get some outperformance. So it's a great place to be right now, Andrew.
Yeah, that makes a lot of sense. And you walked me through that one deal you did, the iOS deal. Can you just talk about how you think about impact? And what I mean by that is, we talk a lot about kind of purpose-driven investments and the impact our investments can have on, on people, on profit, kind of thinking about double bottom line type impacts. Do you think about that as you're investing? Is that something that you feel like there's an impact angle to the investments that you make, or are you might mainly just looking at the financial impact of, kind of generating a return from those investments?
Yeah, I mean that's an interesting question. I mean, yes and no. On the real estate side, I do believe that if you can invest in areas, and you see it in multifamily, right? I do love partnering with people that do have a vision of investing in an area, because they see it rising, right? But also understand that if you can improve an area, improve a place, and make the area a better place for all, you're going to help that community rise, right, in some shape, way, or form. And so there are partners of mine who we have invested in. They take a bet in an area, but I think like most importantly, they think about how they can improve the communities around it. And what I mean by that is, I'll give you an example. One of our partners, they started investing in it wasn't like we were seeking opportunity zones, but we liked what they were saying. They were looking into Hunt, Alabama. They saw it as a place that already had a hardcore scientific community. They saw it growing, and so they started building similar communities that they were building in New York. So in New York, you've got like, you build the apartment buildings, but you put like science centers, you put co-working spaces. So you put all those things in one community that drives young people to go and stay in an area. And so his focus was, let's do what we were doing in Brooklyn, New York, and do that in Alabama. And we've also partnered in the past with groups that focus in college locations, like strong universities, because a lot of communities in the past, they would lose some of their top students to like the coastal cities, Columbus, Ohio, for instance. I know you're in Ohio, and I think that the reason that a lot of those places lost their students was because there wasn't really a that concentration of places to live, to grow, and essentially have like that network effect. Now, for me, as I talked about, we're a diversified strategy. We've The impact side has come more through on helping bring wealth to people, and what I mean by that is how we've done impact, for instance, is when we find what we call independent sponsors that don't have capital, and we can help them with that capital to grow and become stronger and then build their own wealth. And for us, that's impactful, right? Because you might, not have had a chance or an opportunity. You didn't go to Harvard, a top school, and go to the best bank, but you've got the work ethic, you're smart, and you've got a great idea. There are a lot of what we call these independent sponsors that we've supported, where we've loved their drive, because that's like, to me, the most important thing: work ethic. You want to work hard. You're working 80 hours a week, and all you need is that capital. For me, like when you can give that person the jumpstart to build that track record, where they can then go to an institutional capital partner and say, "Look, I have the track record." You're now helping someone who didn't have the opportunity to have that opportunity to go out there and hopefully create wealth. And at the end of the day, that's how you make impact, is where you find people from different communities, different locations, where you're giving them not a hand down, but a leg up, right? By giving them an opportunity to go improve themselves. And so that's how we think about impact. And to be honest with you, Andrew, to be honest with you, Andrew, my mentor, Mark Weissman, he that's what he did for me. To be quite honest with you, I was at a, I never thought about it, and he's become one of my closest friends. I remember when I was working for him, I found him he was very difficult. No one really was afraid to report to him. But when I got to work for him, he took a bet on me, and essentially gave me my start, right? And I think that we should do that to other people also.
Yeah, Sasha, that's exactly what I was going to say. I'm so grateful for the people who have gone before me, paved the way, and brought me to where I am today. And the kind of work that you're doing, where you support independent sponsors, is exactly what I needed early in my career to kind of get me going. I'm particularly grateful. I think about the first group of investors that invested in our first fund. You really need somebody to take a chance on you, and to really, at that point, they're betting on you. They're more betting on the jockey than they are the horse. And if it weren't for that happening, I just think of the ripple effect. Today we have 100 employees, and now we give jobs to all of those people. And that's because people took a bet on us. And so I love how you think of impact that way. That's really, really a impressive strategy that you have in terms of your investment philosophy. Last question I'll ask, and then we'll jump into a little lightning round here. Where do you go from here? So you've obviously accomplished a lot, and you've talked about kind of where you're investing in right now, but what does it look like for you 5 years, 10 years from now? Like what are some of your big goals?
Yeah, having seen some of the major cycles from, and it's hard to believe, I'm 45 now. That's hard to wrap my head around, right? I think I've seen enough cycles where that I think that the experience now will allow me to, I believe I'm going to prove my thesis. As when I spun off back in 21, 22, it was the height of the market, and I wasn't really sure what my results were going to be. It's not where I wanted it to be, but I do think that the tactical approach and finding the right independent sponsors and partnering with them and helping them grow the platform allowed us to do well. And I think now my next step is I want to grow that platform. And I built the right relationships with people that, there's nothing can beat experience, and nothing beats when you get to really know someone, right? You see the bottoms, you see the ups, you see how they behave. And I think like that experience is allowing me to really razor focus what my thesis is on my next iteration when I go back to my partners, and I hope to continue to build it, get it bigger, and really just bring people along with me. Right? I talked about like the iOS platform, this manager that we've been partnering with exactly fits that profile. He's from Florida, Melbourne, Florida. Didn't really know anything about wealth managers or family offices or whatever. He was a broker that busted his butt. I was introduced to him through a broker that's known me for a while, and we took a bet with him, and he's done really well with us. And I've got to know him, and what I want to do is I want to continue working with people like that, and growing platforms together. So the next 5 years, I think like I've been able to hone in on who I want to be with, right? Who I want to work with, what the attitude I want to be part of. Because while we all want to be successful, it's great when you're with doing that with a group of people that you like, and they're bringing you with them, and they're bringing you along with them too, right? So it's like a partnership, right? That's really what partnership is really about. So that's like the next 5 years. And really, I think I told you, Andrew, I just had a baby. She's 3 months, and I think like now, like really, like my focus too is to set myself up where I can really spend time with her. I think it's just been great just being around her, and so I'm hoping that I'll be able to the point where I can set her up, because why we do this, right, Andrew, is for the next generation, right? It keeps you more focused. You really won't know where you want to get, why you're doing it, because family is like super important.
Yeah, well, I just love your philosophy, not just solely focused on what you can accomplish professionally, but really focused on people. You talk about the people that you're doing it with, the partnership approach, bringing up the next generation and being grateful to the generation that brought us up. And of course, your daughter is part of that story, the next generation. And I'm really excited for you to get to experience that as a dad. I've got 3 daughters of my own, as you know, and it's really amazing as you think about what you've accomplished, and I like how you're taking that people oriented approach. So in our last few minutes, let's just kind of get to know you a little bit outside of some of the nitty gritty talk about investing and work stuff. So what would you say is your biggest win?
I think the biggest win was I when I spun out, and I was fortunate to have partners sort of like you that believed in you and believed in me. And when you have people give you the confidence and say, "Here, go ahead and prove yourself," um, that was the biggest win, right? Because it validated that people believed in me and wanted to give me a chance, and that really colored how I think in terms of really wanting to really do well for them, and then do well for those, as I was saying earlier, that I can hopefully do the same thing for. So that's part. You have wins in investments, you have losses in investments, but I think that when you show good character and you show people that you care, and that you mean something to them, and they show that back to you by giving faith in you, it's a win.
Love that. What's a favorite movie of yours?
Um, Shawshank Redemption. That's one of my. I know it's a really old school movie, but I could watch that movie once a month if I had the chance. That was Morgan Freeman at I think at his best, and sort of like what we're talking about, like just like capturing life, right? Like just really
Yeah.
taking advantage of it, and never taking it for granted.
Yeah.
It's like every day you just gotta like go have fun, care about people, and be excited to do what you got to do, because you can be locked up for 20 years, right? So mentally, emotionally, all different ways, and so you just got to really take advantage of that.
So true. Um, what's a way that you're trying to grow right now, a current growth edge, either personally or professionally?
Yeah. So my partner, she's gotten me into meditation. And I don't know if you ever done like the sound therapy and all those things. And I think it's been good because we're always on the go. And I started doing, well, she bought the birthday package for me back in August, and we do it together. And I think it's allowed me to slow down a little bit, because I'm definitely a type A personality, and it's allowed me to just like think through, and most importantly, now that I have my daughter, allow me to relax a little bit, right? Because I think that, like, I would, if something went wrong, I was always stressed out, and I still do. But I think that that these sound meditate, I don't know if you've done it, Andrew, but it's pretty
Yeah.
cool. Like we do it together, and it allows me to appreciate family more, and to kind of block out the noise and grow both personally and professionally, to be honest. So it's been a very um, uh, cool thing for me to try to do that, because I don't think I was meditating enough before. So it's been cool to do that.
Well, I'm a huge advocate for meditation, so I really appreciate you bringing that up. Sasha, thank you so much for being on the show. I learned a ton from you. I appreciate your people orientation, how you think about partnership and the next generation and supporting others. Also just really love your holistic vantage point on, talking about your daughter and meditation and how you're growing. So thank you for being on the show. Thanks for sharing a little bit of your wisdom. Thanks to our listeners for listening in. We'll catch you all next time.
Okay. Thanks, Andrew. Take care. Bye.
Thank you for joining us for this episode of the Real Returns Podcast. We hope that you learned something new about how you can invest to make a lasting impact on those around you. Please be sure to subscribe to our show wherever you listen to your podcasts, leave us a review, and share about us on social media. We hope you will join us for our next episode, where we will be continuing the conversation around impactful real estate investing.